Hey everyone, I'm Jake, and this is Money Mondays. Today's video is going to cover emergency funds and all the mistakes that I see people make with them. Now, emergency funds are a great idea for most people, and pretty much everyone knows that you should have some kind of savings. What people use their emergency fund for is often a completely separate thing than what it's actually intended to be used for. So I see people making all kinds of bad decisions with what they're using their emergency fund for things that aren't actually emergencies. Now, most people know the obvious things of like going out and buying a new computer or splurging on shopping or doing whatever other things don't really count as emergencies. And I think most people are probably aware of that, and they're comfortable with the idea of that their emergency fund is supposed to be for emergencies. But even in that narrow margin, they misidentify what counts as an emergency and what just is an inconvenience. Now, what about unemployment? So if you get fired from your job or you get laid off because work's slow, you're going to need, that's the number one reason why people have an emergency fund, is to cover themselves while they are out of work. It's something so you can continue to live while you don't make any income. So the usual advice that financial planners give when it comes to emergency funds is to have like 6 to 9 months, depends on who you're listening to, but people say around 6 months of emergency savings. Some people will go as far as like a whole year. Some people say 3 months is fine. Kind of depends on who you're talking to. The consensus kind of hovers around 6 months. So if you had 6 months of savings built into your emergency fund, then you could live off of that for 6 months while you go find another job. Hopefully it would not take you that long to find another job, even if it's just part-time work. Maybe you're in some kind of not very high demand field where you might get paid a lot for your normal job, but it's really difficult to find work in off seasons. Now, when they say to have 6 months of savings in your emergency fund, they're saying to have 6 months of expenses saved up. So let's say you have the kind of lifestyle where you spend around $2,000 a month on all of your expenses. It's pretty low for some people and pretty high for others. So depending on where you are, maybe that's a good range to say you spend about $2,000 a month on all of your different expenses, whether that's groceries and rent and all your insurance payments and gas and whatever other things that you're normally doing. You want to have 6 months worth of that $2,000 that you spend. Even if your income might be $5,000 a month, 6 times 2,000 is going to be 12,000. So you need $12,000 in savings if you're going to have a 6 months worth of emergency fund. So that 12,000 will be able to pay for everything as if nothing had changed at all. But in the meantime, while you're spending all of that 12,000, you're going to be going out and looking for a new job or doing whatever you need to do to be able to get that income back to normal for you. Usually, when you lose a job and you have to start pulling from your emergency fund, you know that you're going to be in a tough spot, and so you start cutting back anywhere that you can. You're going to stop going out to eat. You're going to probably drive as little as possible to save on gas. Probably be doing a lot more grocery shopping because you're not going out to eat, but then try to also be maybe shopping at like Walmart or something, wherever the cheapest food it could be. So you can save on your grocery bills too, and you'll probably be buying more junk food because that tends to be cheaper than like fresh organic vegetables and that kind of thing. So people are trying to cut back wherever they can. If you have been laid off or you've been fired or something, you might be able to collect unemployment insurance, but that might take a little while to kick in. So there's all kinds of different things that hopefully you'll be able to extend or to live off of during that time where you're unemployed, but then you want to try and get that new job as fast as possible. So one of the usual things that I recommend when people are building their emergency fund is that they keep it at a completely different bank than what they normally do their regular daily checking savings accounts in. So if you have bank A, where you're doing all of your regular your debit card and your daily transactions and everything, go to a completely other bank and have your savings, your emergency fund savings there. Because what happens is people will put all of their emergency savings in their regular savings account. Let's say you open a bank account at one of the banks. Usually they open a checking and a savings together with you don't just get a checking account and nothing else. They usually have both of them, and people transfer back and forth all day. They do all kinds of different things. And then What they'll do is they'll make an emergency fund, but they'll put it in their savings account, which is linked to their checking, and they'll be transferring back and forth. It's great to be able to easily transfer money into your emergency fund, but then when you want to buy something and it's like, oh man, I'm short on just a couple bucks, I'll go ahead and transfer, it's no big deal. They start transferring, and then they get used to it, and they start transferring a little more and a little more, and eventually they're just transferring out of their savings all the time, and they stop feeling guilty about it, and they stop thinking like, oh, it's not a big deal. And eventually they are just spending all of their emergency fund, and they just lost all that money that they spent on little bits at a time, or going out to eat, or clothes shopping, or doing whatever it is that they don't actually need to be doing. So what I say is take your emergency fund and put it at a separate bank completely, to where you can't easily transfer out of it. You'll always have a checkbook associated with it, so if you had to write a check, you could. You'll have a debit card associated with it, so if an emergency actually does happen, you can go ahead and use that debit card associated with that other bank account where your emergency fund actually is. So when putting your emergency fund at another bank or another institution, I like to recommend credit unions, because they typically have higher interest rates. And so if you're putting money at a savings account at a credit union, you might get more build up in that interest, that you have interest payments to you, than you would at a traditional brick and mortar type bank. One of the things about keeping your funds at a separate institution, you could also put them in what's called a money market account, whereas a traditional savings account has some interest rate associated with it. But a money market account is typically more of a longer term type savings, and it's built in to have a higher interest rate. So you can get paid from that savings account more than you would if you had just a traditional savings. And then obviously you don't want to have it in a checking account. You could have some in a checking account, because that makes it easier to spend in case you do have that emergency. But having all of it in a checking account for long term means you're making nothing on it at all, and you're actually losing out to inflation. Another option to look at that's not a credit union is an online bank. A lot of times the online banks will have lower overhead to manage their company because they're online, and rather than having a bunch of buildings around the country, which means they can offer higher interest rates to savers and better interest rates on mortgages and credit cards and whatever other things that they offer. One of the most popular, well-known online banks is called Ally Bank, and they've had CDs and money market accounts and things that are more than 1% savings, which is really good nowadays. In the past, that would have been like a terrible interest rate, but nowadays, ever since the Great Recession, they call it, interest rates have been really low, and so having a 1% savings rate, interest rate on your savings account is actually pretty good compared to most banks. So Ally Bank is really popular. A lot of people know about them, but there's also tons of other online banks. I'm not affiliated with Ally in any way. I'm not getting paid to mention them, but they are the most well-known, and they do have a very good interest rate on their savings account or money market accounts. So people are using their emergency funds for things that aren't really emergencies. You see a great deal at a store, or your friend comes from out of town and you have to go out with them. Those are things that aren't really emergencies. They might be fun things that you really want to do, but that's what a regular savings account is for. Like, you should just have a normal savings that you're using for your everyday transactions, but you need an emergency fund, with a stockpile of cash, and that's your personal insurance in case something happens. You have insurance for your car in case something happens to your car. You have health insurance in case something happens to you. Then you have your emergency fund, which is in case something happens to your general lifestyle. You get laid off, your water heater explodes, your roof collapses, something that you just could not have planned ahead for, and something happens that you just need to cover out of pocket. So those are the basics about how emergency funds work. If you want to see more information about this or other financial topics, you can check out our website at arbogastadvisers.com or our YouTube channel at youtube.com/arbogastadvisers. Thanks for watching. Is really easy to open. You can just go online to TD Ameritrade or Charles Schwab or any broker you want.
Do you know when the FAFSA needs to be filed?
I do not.